and current assets, so current investments. There are three activities you need to master. Number one, operating activities. Number two, investing activities. Number three, financing activities. Okay, there's a set pro forma. We had a discussion regarding operating activities, buying and selling in general items. Tax and interest goes in it here as well. Inventories, receivables, and payables comes in it here. Means working capital comes in it here. Investing activities when you buy and sell non-current asset. Financial activities when buy and sell shares or dividend being paid, not received. Received comes under the investing activity. Does a long payable payment period indicate cash flow problem? That does indicate it. That's true. Yeah. Why would you do delay? Because you don't have enough money. Yeah, that was a question from Omid. Indirect and direct method. So straight into the indirect method. Direct method at the end of the lecture, we're going to see indirect method. This is the pro forma, which is also shown on my YouTube video here. Let me show you. Like if you watch this video, the similar thing I'm going to do it, operating activities. Yeah. There are loads of workings I have done in this particular video, loads of workings. Yeah, so those are definitely needed. Some of the workings I'm going to show you here, minimum 3 to 4 workings, but in this video maybe 9 workings I've shown. And this question was really difficult. Even many teachers, they struggled then time in A levels. You know, in A levels, because I taught A level for many years in London. A levels teachers, they are not chartered accountant. Not even many of them are not even AAT. They just study general business and come and teach accounting. It's difficult for them. Well, pro forma. Yes, we do call reconciliation. Operating activities, reconciliation. This is the pro forma in front of you. You need to master it. You need to learn it by heart. The first thing, we start with profit before tax. That will be given to the SPL. Plus, the next one, plus depreciation. This is the second one. Third one, it could be plus, it could be minus. Anything. Loss on disposal, you add. If it is a gain on disposal, you deduct. This time it's a loss on disposal, you add. Finance cost, which is basically your interest, that is your fourth one, you add. Add here, but at the end of it, again, you less there. This is just a presentation way. Finance cost, it doesn't affect. Why? Because into the financing activities, we take the whole finance, a whole loan or a mortgage item, whether paid or received, we take it into account. That's why finance cost, interest paid in a presentation way should be taken away. So just bear in mind this interest or finance cost is number 4. Number 5 is your dividend received. Again, dividend received is an income. This is an investing activities income. You show it here as a minus and you show it as a positive into the investing activities as well. So it doesn't have any effect from the dividend income. Ultimately, the shares you bought is a money out. That is the way we show it. You have to take away this finance cost and a dividend. Okay, moving on to, these are the things you need to learn it by heart. Please, my urge to all of you, you have to learn these things, this pro forma. Not all of it can be given into the exam. Maybe disposal not given, maybe dividend received not given. But if it is given, these are the possible maximum items being shown. Like profit before tax, add depreciation, add loss on disposal or less gain on disposal, add finance cost, less interest, dividend received. This is what the items you need to learn it by heart. Then other 3 items is known as WC, working capital, or changes in working capital, CWC, changes in working capital. No. Dividend received and paid is not the same thing. Dividend received is investment income, okay? There's a question. And dividend received is an investment income. You might have bought some shares of another company and that company is giving you dividend. That's an income. And dividend paid is like your company's dividend shares been bought by other people and you're giving them dividend. Well, changes in working capital. What are the changes in working capital? Look at this. They said increase or decrease in inventory. There is an increase in inventory by 3,000. People, how do you know it is an increase and decrease? You need to compare last year with this year. Last year with this, I will show you a typical example. How does the question look like? A question looks like this in front of you. There is a example called Silver Limited. This is an income statement, or SPL, you can say IS or SPL, income statement. And then there's a balance sheet, or SOFP. This is last year. This is this year, 2011, 12. Yeah, we bought more, Ruchit. We paid extra, money gone. Yeah, have a look here. Inventory last year was 102. Inventory this year is 150. That means we bought more inventory, money gone. The difference between these two is money and which is gone. Make sense? This is another example, but this is the information you use in your answer. 2 balance sheet, 1 income statement. Am I understood? I repeat, in the exam, you will be given with 1 SPL and 2 SOFP. Using these 2 information, you need to prepare your cash flow statement. So similar way you can get the information regarding receivables. Now this is another not good thing again. Last year your receivables were 315. This year receivables are higher. Your money is stuck with this receivable, isn't it? Your money is stuck with the receivables. That's not a good thing. Your money is minus, kind of. You need to reduce your cash flow here. And let's go to payables if I find any. Excuse me. Payables increase is a good thing. Money belongs to you. Last year to this year, that's a good thing for you. Payables increase is a good thing. Decrease is a bad thing in terms of money. So this is all you need to remember. If inventory and receivables increased, that means your money gone down, money decrease, and the opposite is the other way around. So many things we got to discuss. Cash and cash equivalent. You have opening, cash and cash equivalent. This is called closing. Do remember, please. Last year means opening. Last year means opening. And this year means closing. Last year's opening items, whether asset, liability, income, expense, cash, whatever it is, opening. And this year is closing, asset, income, liability. Now, people, excuse me, what is this? Okay, let's go on it here. So here's again increase in receivables, increase in inventory. That means making your cash flow down, minus. Can you see a minus sign, minus sign? There is an increase. This one is also increase. This is a positive thing. Increase in trade payables must have an increase. This is a proforma given, no question. It's just a proforma given. So by doing these things, you get net cash generated from operation. Cash generated from operation. From your operation, that is the cash generated. Couple of more activities you need to do. The interest you done at the top, that interest needs to be taken away. This is just a presentation, once added, once taken away. So this is a presentation where ultimately no effect because of the interest. Tax paid, you have to do workings. That's your first working. Very often profit you need to do working. In my YouTube channel video, I have worked out the profit heavily using the retained earnings, but you don't need to do it. So I'm erasing this one here, profit. Yeah, the first working you need to do tax paid. Please do remember, write down a formula, proforma, a formula for tax paid. Opening tax plus charge for the year less closing tax equals to tax paid. For any figure could be. Make sense? Opening tax plus charge for the year less closing tax, you get charge for the year, tax paid. Opening tax plus, where do you get the opening tax from? SOFP. Opening SOFP, okay? Where do you get the charge for the year? Income statement, current year, IS of current year. Income statement, current year. Where do you get the closing tax? SOFP of current year. Okay, that's that. That is your operating activities. This is just a pro forma, people. This is just a pro forma. Yeah, these are all imaginary figure they've done. So net cash from operating activities, that's your first part, 14,400, which is here. Then you do the second part, which is we call a net cash from investing activities, like purchase of plant, money gone down. Receipts from sale of non-current asset, money gone up. Dividend received, money gone up. Ultimately, there's a huge 14,000 money down. Net cash used in investing activities. That's the wording you use. Net cash used in investing activities. That's your second part. Third part is about your financing activities. Proceed from loan means you have taken a finance, money taken from bank or investment um, business angel, anybody. Issue of share capital, you issued some share capital, money up. Dividend paid, money down. And you see, this dividend received is here plus and there minus in the operating activities. Ultimately, no effect. Because why? Because that is already been dealt with into the profit and our investment, share capital investment. They showed into the assets. They show into the assets here, not separately shown. The third one is money, net cash generated from financing activities, and that's all. There are three activities I'm highlighting: 14,400 from operating activities, 14,000 minus from investing activities, and 16,800 positive from financing activities. If you add all these three, you get 17,200, which we call a net increase. There is no decrease. There's a net increase in cash and cash equivalent. Yeah. So during the year, you had an increase 17,200 plus cash and cash equivalent at the beginning of the year. At the beginning, where do you get it from? From the balance sheet again, or financial position. Yeah. How much cash or cash equivalent you had. Added up together, you get equals to closing cash and cash equivalent, 7,700. These two figures are given into the exam. 500 opening cash and cash equivalent and closing cash and cash equivalent. These are given into the balance sheet. And that's the way of checking your cash flow statement, whether you have done it right or wrong. If it balances, you can dance. You can dance after the exam, not during the exam. Yeah, invigilator will be looking at what is happening. Okay, moving on. Illustration number 1. Okay, what if it does not balance? You cannot dance. You should be worried. There is a question from Shehzad. If your closing cash and cash equivalent doesn't agree with your balance sheet information, you should be worried. You go and check your work here. Oh, let me tell you what are the other possible workings. I said tax is a possible working, definitely. Then purchase of a non-plant is another possible workings. Receipt of sale of non-current asset could be workings. Proceed loan, no. These are very simple working. I don't see these are the purchase of non-current asset is a working, sale of a non-current asset is a working. Tax paid I showed you. Purchase of non-current and sale of non-current asset is easy workings. I will show you in a minute. Let's go over this illustration number 1. Interest can be working if it is half yearly interest. You know, you need to be careful, like how many months the interest held for and take that much interest. Level 4 people. Yeah, so you must keep your eyes and ears open. Illustration number 1 is statement of cash flow using the indirect method. Now, what our approach should be, ignore this time for the time being. 2011 is opening, 2012 is closing. I can see inventory, receivables, payables. I can take my decisions. Ignore the interest and tax for the time being. Requirement, big requirement. Even they are giving you some solution. Even draft the reconciliation profit. Where is the question? I said we need 2 information. Yeah. Okay. This is not a proper question. They gave you answer and question together. They gave you answer and question together. I'll go a little faster here. Let's go over this one. Last year 16,000 your inventory, this year 17,000. So of course it has gone up. I don't know how much by, you can get the difference, but tell me what happened to your money. Inventory gone up, that means money gone. Cash flow gone. Yeah, well done. Down. Thank you. Cash flow gone down. Thank you. That's the one first thing. You got it right. Cash flow down. Okay, receivables. Now again, receivable last year was 20,000. This year was 21,000. That means your money is stuck with receivables. What happened to in terms of cash flow? Yeah, cash flow gone down. Thank you. Trade payables last year was 7,600. This year trade payable gone up. That means you didn't give them money. Money belongs to you. Money is stuck still with you. That means cash flow gone. Well done, up. And you can get the differences. That's all right. Now, in the solution, as I said, this is not a proper question. They gave you question and answer together. First one, they said add the depreciation. We're going to do it. I don't know how much is the depreciation. Then the second one is adjust any profit or loss on disposal. Remember, profit, you minus, loss, you plus, job done, move ahead. Add back the interest finance cost, but it is not given in the example, so we don't do anything. You add back here and less at the bottom. Adjust the changes in working capital. Working capital means inventory, receivables, and payables. We had our discussion. Opening given this, closing given this. That means the total purchases they have done little extra work here. Opening inventory plus purchase less closing inventory. Yeah, cost of goods sold, they're trying to do it, which is none of our concern for the time being. Opening payables given, closing is given. Okay, little extra mile they are working here. None of our concern for the time being. Don't put too much emphasis here. Operating expenses given. Okay, like let's see. Okay, inventory, receivables and payables, they have worked it out, but they are trying to say something else here. Don't bother about it. Yeah, don't bother about it, just focus here. Okay, now profit before tax. Where is this information? Is, as I said, it's income. Question and answer is together. So that is straight away given, we assume. Add back depreciation given, loss on disposal added, increase, decrease, adjusted. You get profit from operation. That was not much, I would say. I think this is the bigger question. Silver Limited, yes. Silver Limited, preparation examples for Silver Limited. Okay, so get ready for a big question, and this is on Silver Limited. You have been asked to prepare this cash for Silver Limited for the 31st December 2012. So 2012 is your current period. 2012 is your current accounting period. Last year, 11 should be your opening, which will be anyway given, highlighting the in SPL for you. Did you remember I said 1 SPL and 2 SO? FP will be given. That is your 1 SPL and 2 SO FPA, 11 and 12 given. And you are doing 2012, year ended 2012. Quickly going over at a glance: sales, cost of sales, gross profit, dividend received. So you know what to do. You need to deal twice with these things, don't you? Loss on disposal. Loss on disposal, you need to add it back, don't you? Distribution, admin costs, finance costs, you need to deal twice. It is once add and once minus at the bottom. Tax. Now, regarding tax, you need to do workings. If you remember, opening tax plus charge for the year. This tax 140 is called charge for the year. Charge for the year. Yeah, that's great. Okay. Now, in the balance sheet, I'd like to test your just general knowledge, non-accounting knowledge. Non-accounting knowledge, testing your knowledge. I'm going to ask you a very simple question. You know, in 2011, Mr. Penn, come up here. Your assets was 305. In 2012, assets are 380. Why? Why can be a general reason? What can be a general reason? Because you, yeah, simple. Bought a purchase. Lovely, good answer. Yeah, keep it simple. We bought some assets. Yes, we bought some assets, but how much we don't know, because you bought your investment's gonna go up, but investing activities cash flow gonna go down, doesn't it? Yeah. And do remember there could be depreciation as well. You need to take away the depreciation. You need to compare your net book value with the closing net book value, and then you compare how much you bought it for. Then we can see receivables and couple of receivables. It has increased, so cash flow decreased. Sorry, inventory increased, receivables also increased, cash flow decreased. Let's talk about this one, cash and cash equivalent. You know, this is your opening cash and cash equivalent. Yeah, you add all your net cash flow with opening equals to you get closing. That's how you can see, like, oh, my cash flow balanced. Then the dancing part comes in. Yeah. If it doesn't look like 52, you should be a little bit worried. A little more, I'd like to see if there is any overdraft or not. Oh my gosh, there is overdraft. So this is not gosh, this is one extra work you need to do. Let me tell you people, or let me ask you one thing. You know, in 2011, you had a bank overdraft 98, yeah? And you had a cash money 1. So ultimately, how much is your cash and cash equivalent? Yes, 97 overdraft. Thank you, Richard. Does it make sense, people? Positive money 1, negative money 98, ultimately minus 97 in your bank. That is your opening money. So you started the business at the beginning of the year, 97 minus, right? At the end, how much is your bank overdraft? 85. But how much is your positive money? 52. That means 52 minus how much? 85. Give me a figure. 33, I'm taking your answer. I'm not doing it. 33. That means that is your closing. Do you understand me? Yeah. Minus closing. Minus 32 or 33. Thank you. Yeah, minus 33. Overdraft 33. So if your cash flow is minus 33, automatically when you add minus 97 plus your all the cash flow, 3 cash flow together, which gives you minus 33, then the dancing part comes in. If it is not, you should look for again and again, why did you do a mistake? And then last year your share capital was 50, this year 100. What happens to your cash flow? Your business has received more money. Yeah, so cash flow gonna go up. Share premium, again, cash flow gonna go up. Retained earnings doesn't affect it. Profit, we take into account the profit, but retained earnings doesn't affect your cash flow. Loan, look at the loan. You had no loan, but you have 100 loan. What happens to your cash flow? Tell me this year. Cash flow has, yeah, up or increase. Thank you. Everybody is correct. Okay, payables. Now 199, this time more payables. Tell me, cash flow up or down? In terms of payables, up. Thank you. Oh, I hope you understood how do you do the overdraft. Yeah, tax is a liability. This is your opening tax liability. This is your closing tax liability from the income statement. Charge for the year, opening plus charge less closing, you get tax paid. I hope you understood the workings thing. Here is the depreciation charge given, which we add back into the operating activities. Also depreciation, we take into account while calculating the purchase of non-current asset. Have a look here, this one. Many students, they struggle here, I have seen in past. Property, plant and equipment costing 85, with accumulated debris 40, was sold during the period. Okay, tell me how much is the net book value of your asset? Or what is the carrying amount or net book value? Property, plant or equipment, it was a cost 85, accumulated debris 40,000. What is the net book value? Net book value, definitely 45,000. Thank you very much. Thank you very much. 45,000. Now, if you sell more than that value, you get a gain. If you sell less than that value, you got a loss. You got a loss. My next question, hold on. Like I'm giving you an imaginary figure. 5,000 loss. 5,000 loss. I said it. I sold my asset at 5,000 loss. How much I sold it for? Who gives me that answer? I need 10 answers. I got 1. I want 10 answers. Come on, let me see how many people are here. I got 2nd answer. Right or wrong later story. And 3rd. And 4th. Okay. If so, everybody says it's 40,000. Okay, I got a different answer now. Okay. Let's see more. I got most of the answers 40. 1 is 35. And I will go with most of the people. Yeah, 40 is the right answer. 40 is the right answer. My question was, majority wins. Okay. Have a look. Net book value means the worth of your asset, right? That's the worth of your asset. But I sold it 5,000 less. How much I sold it for? I must have sold it for 40,000. Did I not? I sold it for 40,000. That's the reason for 5,000 loss. Okay, that's the simple answer. That's how you people got it. Now, this answer, I'd like to check the income statement of my question. SPL. Is there any? How much is profit or loss? Loss on disposal. Can you see how much is the loss? 13. That means how much you sold it for then? Can you give me that answer? Of course you can. I know those of you gave me 40,000. You can definitely give me that answer. How much you sold it for? There's a loss of instead of 5 now it's, oh my god, I forgot, 13,000. I think I saw it. Yeah, 13,000. Yeah. 13,000. How much you sold it for? 32,000. Well done. Yeah, 13,000. If I write it down here, that means I must have sold it for 32,000. That means by selling it, how much cash you generated? 32,000. Simple. Where do you record it? Investing activities, financing activities, operating activities. Where do you record it? I'm testing your knowledge, you know. This 32,000 you recorded. Thank you. Well done. Everybody is correct. Investing activities. I like the way you're answering people. All good people are there. Lovely people are there. Appreciate. Okay, moving on. That was the only hard thing here. And of course, if you sell any asset, just one more stuff I'd like to go over here. If you sell any asset, that doesn't belong to you anymore. You need to minus it from your asset. Yeah, you need to minus. Like if you had any asset at the beginning, how much asset we had there? Let me see my balance sheet. 3 or 5. minus your depreciation, minus current year depreciation, minus your assets you sold. Yeah, yeah, 32,000, Faiza. Then you compare with the closing one, how much you asset bought it. Okay, moving on. All sales and purchases on credit, other expenses paid in cash, so that's all right. Dividend 100,000 was paid during the year. Okay, that's all right. We'll keep these things into dividend paid, yeah, in financing activities. Oh, they didn't do the question. Horrible them. They didn't give you the answer. Okay, let's do the activity one, yeah? Oh, hold on, hold on. This is a separate question. Let me tell you. This is okay. I found it. Now, based on basically this example, all the other activities are made. I repeat, based on this example, you know, there's a big example, like one SPL and couple of balance sheet and few, one, two, three, four adjustments. With this information, you need to do activity 1, 2, 3, 4, 5. Make sense? Let's get started with activity 1. Let's get going with activity 1. Show the adjustments in respect to working capital. So in the working capital, what comes in? Inventory, isn't it? Then trade receivables, and then trade payables. Let's quickly do it. Let's do it together. Let's quickly do it. Here we go. Inventory. You set it down, but down by how much? Can anybody work it out for me? 150 minus 102. 48, yeah? Your inventory going down by 48. Thank you, people. Thank you. Write me the second one, next one. Your receivables 390 minus 315. 75, yeah? 48, 75. Both of these are minus. Yeah. Oh my gosh. I got 75. It should be 75. I can see a 5 there, Shizad. Check your answer here. Okay. And trade payables. How much it is, by the way? 48, 75. Before I forget, let me write it down. 48, 75. Both of these are minus. And trade payables. How much is the trade payables? Has anybody worked it out? Trade payables. It's gonna increase, yeah, which is good thing. 2 to 7. Sorry, 2 to 7 minus how much? 199. 28. Thank you, people. Thank you. 28. So it's a positive figure. 28. Now, they didn't give you the total. Maybe in another activity, they're going to give it. Let's check our answer. Yep, that's correct. 48. 75 minus. Yeah, it is minus. We did a minus and 28. Yeah, well done. That's your activity 1. Let's go to the next one. Operating activities. Now, interest and tax paid. I believe everybody knows the formula regarding the tax paid. Now, cash generated from operation. Once you get the cash generated from operation, you deduct a couple of items. One is interest. One is tax. But regarding tax, you need to work it out. Interest can be a copy-paste item, no problem, from your income statement, SPL. Let's quickly check it out from SPL. We need to come back to this question again and again. 66, can you see? 66. So straight away write it down here. Interest again, one's added, one is deducted. Here at the bottom, it is deducted. 66. And tax. Can you please work out the tax? Or let's make it faster. We said opening tax plus charge less closing, you get paid, tax paid. Now opening is 160. Charge for the year is from the income statement. How much it is? 140. 140. 160 plus 140. Less closing is 190. How much you got it? Oh my gosh, my calculators. Okay, what is this? 110. I'm taking you people's answer. Just quickly doing it here. 160 plus 140 minus 190 equals to 110. That's true. That is your tax paid. Just okay, let's write it. Then I will tell you one more thing regarding tax paid, which you need to remember. 110 tax paid minus. Oh, they have even given you the working here, opening plus charge for the list closing. You get paid, yeah? Okay, let's check the answer first. It is, and can you see balance BD plus charge for the year, which is SPL, less balance CD means closing, you get tax paid. You remember this way. Now, if for any reason, charge for the year is not given, let's assume charge for the year, income statement not given, what is your tax paid? Please do remember, last year tax is paid this year. What did I say? Last year tax is paid this year. Tax is always paid in arrear. Like 160 would have been the answer. Okay. You calculate tax this year, you pay it next year. Or last year tax is paid this year. Nice and good. So two rules regarding tax. One is this, one is last year tax. If two taxes given, last year tax. If three taxes given, you follow the formula. Moving on. Okay, that's a good one. Example of working proceed of disposal. We have done it, but I'm showing you again. Carrying amount, and you adjust the gain on disposal, you see how much you received money. Sale proceed. Sale. You know, in our example, we had a carrying amount 45,000, wasn't it? And there was a loss of 13,000, wasn't it? And ultimately you received sale proceed, meaning how much money you received, 32. That's the formula. Please remember it. Please write it down. It comes in the exam. It's going to come in the exam. Not just this question, in different question, it comes as well. Yeah. Like in SPL, SOFP questions, last chapter and chapter before we've done it. The next one here, this one, example of purchase of PPE, property, plant and equipment. Purchase. How do you do it? Property, plant at the beginning, we call it opening. Last year, how much you had? Let's say you many amount, 300 pound, 1,000. Less depreciation charge for the year. Again, any amount, 10 minus. Less net book value of the equipment sold. You know the 32 we sold at the top. Here we just done a little earlier. That should be less. And then the figure you compare with the closing of your non-current asset, balance CD, or call it closing this year. Yeah, at the beginning we had 300 minus debris minus any asset sold. Then you compare with let's assume 400 maybe. At the closing we had 400 worth of asset. At the beginning 300, at the closing 400. When I asked you that question, you said, yeah, we bought some asset, but before buying there could be a couple of adjustments. These are the two adjustments, and then whatever is left over is the asset you bought, a purchase of non-current asset. Clear, people? This is a big working anyway, but I hope it makes sense, and let's do some works here. It's going to make more sense, I believe so. Activity 3. Non-current asset here. Yeah, PPE we're going to do. Okay, what is this? You know, this is another question coming from the example, profit before interest and tax given. With that, what do? Don't you add debris? Answer is yes. Then we had a loss on disposal. That means add it. Loss on disposal. I remember it's 13. Disposal 13. Add it. Don't you? Yeah. And then finance cost you add here, and less at the bottom. The same finance cost, interest paid. So finance cost. This is the proforma. You must learn it by heart. And dividend received. We do have some dividend received, but I don't know how much it is, but dividend received. We need to check it out from the top. Yeah. Dividend received should be taken away here and added into the investing activities. So let's check out depreciation and dividend received from the top. Depreciation is 90,000. Yep. And dividend received is an income. I can see in my income statement. 43,000. Yep. 90 and 43,000. So 90,000 add 43 deduct. Debris 90,000 added. 000 is already at the top. We don't need to write it down. And dividend, I said 43,000 taken away here and added into the investing activities. Well, who gives me the answer for cash generated from operating activities? 284 plus 90 plus disposal plus finance cost minus this minus plus, and then you get an answer. Who does it? Can you work it out? Let me work it out as well. 320 is this. Aslam says 320. Anybody else would like to say it here? This box, yeah, only this box. Let's do it. 284 plus 90 plus 13 plus 66 minus 43. I got 315 from some people. Minus 48 minus 75 plus. Oh my gosh. Did I not? Minus 75. 28 minus 75 minus 75. What did I do? Let's do it again. Profit 284 plus 90 plus 13 plus 66 minus 43 minus 48 minus 75 plus 28. Yeah, 315. I agree with 315. Ooh, okay. Be careful, yeah, with calculation. You got to be careful in exam as well. I would suggest do it twice, yeah? You know, the first time, I don't know, what did I get? Maybe something wrong I put in it. When you rewind the video, you can check it out. Anyway, of that minus these two, what do you get? Net profit or the first thing, operating activities. Net cash generated from operating activities. 66 minus 110. Yeah, 139 is the right answer. 139. We'll check the answers later. Let's do investing activities. And before the investing activity, in the investing activities, what are the couple of items that goes in it? Yeah, net cash generated from operating activities is this 139. And investing activities, if it's in a purchase of non-current asset minus, yeah, purchase of, and there is non-current asset, which is a minus going to be. And if there is a disposal of non-current asset, yeah, dividend we're going to do as well. Disposal, we do have a disposal of non-current asset. You know, we got £32 of NCA. We have worked it out. You remember 32 at the beginning, you done it. That's money in, you write it down as well. Any order, you can write disposal first and purchase later on, no problem. And dividend received plus 43 dividend, I remember just a little earlier I done it. Dividend received, which is 43, and that's it. We just need to work out purchase of non-current asset. And how do you do it? But here, this is the one you do, okay? This is the one you do. The easy way of doing it, opening, I call it minus depre, minus any asset, net book value of asset sold. Now, minus sold, just simple sold. Of course, net book value, asset you sold it. Then you compare with closing. I call it compare, but basically you minus, yeah? Okay, now all these things we're going to take from the 90,000 depre, I remember, isn't it? 90,000 depre. The asset sold was 45,000 net book value. Worth of the asset, 45,000, isn't it? Yeah. And opening and closing, you just need to take out from the balance sheet. So going up, both of it, gonna take out. Okay, little up. That's the one. 305, 380. Be careful, Richard. What is that? 148, 102, I don't know. 305 is opening and 380 is closing, okay? Okay, hold on. Come on. 305, 380. Yeah. Let me tell you again the story. At the beginning, you had the worth of 305 asset, less depreciation, less some of the asset you sold it. You have now 380. How much you bought it? The difference. The difference you bought it. Yep. Give me the answer now. 305 minus 90 minus some assets I sold it. How much asset I should have? 170, but how much we have it? 380. So comparing with 380, that means is it 435? No, I got 210. 210. Can someone else work it out? Yeah, 210. 210 should be. Aslam says 210, waiting for more people's answer. Okay, let me just quickly do it. At the beginning, we had 305 minus 90 depreciation, minus some of the assets, 45. How much we should have? 170, but we have more than that, 380. That means we bought more asset, minus 380. How much we bought it? 210 is right answer. Thank you. Okay, I'd like to check this answer. This is activity. Hold on. What is this? This working is for proceed means disposal. Yeah, we have done it, doesn't it? Yeah, carrying amount and compare with the loss on disposal. We had a loss on disposal 30 and net book value. Net book value means carrying amount of the asset was 45, wasn't it? Yeah. Um, and sale proceed is 32. Yeah, that's it. Let's check the answer now. 139. Boom. Well done. I didn't do this one, maybe, no? But what we did is this one, and 210 is correct. Okay, I think we're still left with some of the items. Which one? Which one? Come on. Oh, here. 210. I didn't write it, isn't it? 210. I put it, but I didn't do it. Let's do it then. Let's do it. 139 was positive from operating activities minus 210 assets we bought, which is minus. Some of the assets we sold, 32. We received money, and some of the dividends we received 43. 4. Is there? Is that correct? Let's see. Okay, hold on. I did something wrong. I shouldn't take this one because it's being asked which one. You can't do that mistake as well. Yeah. Net cash used in investing activities. So we must be with this investing activities. So 4, although 4 is generally correct answer when we do casting, but we don't do casting on this. Am I understood? Is that clear? You meant to do net cash used in investing. From your investing, how much money in and out? Of course, it's a huge out, but that's what you meant to do it. 210 is minus. So start with minus 210. Plus 32 plus 43. Net cash generated from investing activity is minus 30, 135, or you can do a bracket. So this is your 1, this is your 2, and then investing going to be at the bottom. Then we add everything together later on, not one by one. Have you got this one? Yeah. How did you get the 135? That's the one they got. Yeah, that's the one 135. You don't add this one. Can you see this is blank? Yeah. We just add this 3. Yeah, investing activities. This is 1, this is 2. And finally, you're going to do the third one, which is financing activities, I believe so. Financing activities. So straight jumping into the question. Financing activities could be share capital, could be loan. You have taken loan, doesn't it? What it could be, dividend paid. Maybe I have seen a dividend paid. Yep. So only these 3 items looks like, but let's quickly go into the question. Balance sheet, I'm checking. Hold on. Loan, I see 100,000 loan is already up. Share capital, share premium, both together you need to take. Share capital and share premium. Share capital gonna go up 50, isn't it? Share premium gonna go up 10, altogether 60, because we have only one space there, share capital. And loan, 100 up. Am I understood here? 60 and 100. And there is a dividend paid I saw somewhere, maybe at the bottom. That's the one, dividend paid, 100. So please do remember the figures. One is 60, one is 100. Both of these up, one is 100 down. Yeah. Retained earnings doesn't go. It doesn't affect your cash flow, does it? It's a profit. You're welcome. So if you meant to put here, share capital and premium 60 up, loan 100 up, and dividend 100 down. Boom, boom, boom. 100 gone, 60 left. So that's your financing activities. That's your third one. Now, people, let me summarize it. From operating activities, I'm taking another color pen now. From operating activities, 139 positive money. From investing activities, 135 negative money. And from financing activities, it's a 60 positive money. So ultimately, it's going to be a positive money anyway. But how do you do it? Oh, they done it. They made our life easy. Look at this. Like they done the operating activities, 139, good. They done the investing activities, 135. So that's my 1, that's my 2, and that's my even 3. What do you do? All these 3 you add. Am I understood? 139 plus basically it's a minus here, 135. It's a minus 135 and plus 60. Make sense? Can you do it? And give me the figure of net increase or decrease in the cash and cash equivalent. How much it is? minus 135 is already there. 139, which is 4 plus 60, 64. I do agree with you people. Yeah, it should be 64. Okay, I'm writing it down. 64. Okay, it's 4. Yeah, 64. Cash and cash equivalent at the beginning. How much is the cash and cash equivalent at the beginning? Did you remember? I've worked it out. 1 positive and 98 negative. I remember that one. So 97 minus. Yeah, 97 minus. So 64 minus 97. How much would be left? Well done. 33. Minus 33. Can you see it? How do you get the minus 33? Closing cash and cash equivalent. You see, I worked it out at the beginning, but I'd like to show you the workings again one more time. Then you can dance. Yeah. Okay, hold on. Where is it? So much like flip. Yeah, that's the one. I don't know, somewhere I have done it. 85 was negative and 52 should have been positive from Richard. Yeah, 52. That's the one I done it. Yeah, you remember closing 33. Opening was 97 and closing automatically it becomes 33. That means your work is done. That means all the operating activities, investing activities, and financing activities, you have done. All the hard work is correct. And 33 is the right answer. Let's see the answer, by the way. We don't need to see it is balanced, but just checking it out. 60 is correct. 39. We know this.